door and very little opportunity for offer pad. This is really not a good market for them. Yes.
Any data on the West Valley?
Any specific data on the West Valley?
Show the growth now.
Oh, yes, there is a, that might be another month, maybe in a couple of months back. I'll probably focus, there is a transportation plan or development plan for the western part, like beyond Peoria into Whitman and Buckeye. There's like a whole, it's enormous. It's amazing actually, but they have plans for West Valley. Yes.
So we've got appreciation on the low end and we've got appreciation on the high.
Yeah.
But the ultra high over 3 million was actually in depreciation. So
Yeah.
That's not what we've been seeing. What we've been.
That's because they're just very erratic. Once you get over 3 million, I don't have enough sales, and so you have a really high one, then you have a really low one, and it just, yeah. You have to do like a 3, 6, or 12-month moving average just to get a much better idea for that. But I throw it up there just so you can see it. But it's just a little, it's an ugly chart, unfortunately. Did I get them all? All right. Thank you, guys.
Put your hands together, guys.
I think Jay Estrada, are you in here? It's like watching the Cardinals game. So, I need your attention. We're doing really good on the Mackey's Place donations. The money's coming in, the supplies are coming in. So I'm gonna need you to step it up.
So we are back in town here at Arizona Real Estate Investors Association. We got Focus Law Group here today. What's going on in the legal atmosphere here with real estate in Arizona?
Always something.
There's always something to do in up and down markets. It's important to be nimble and have legal on your side at the end of the day. So we're here enjoying the venue and networking with other private investors, other hedge funds, people performing out in the market. Talks to Mike Del Pree, who's actually running for city council here in the Arizona market. See if I can't get my headphones in here real. A long story short, I'm Alden Guajardo from Mobile Mailbox Money, Win Mobile Homes and Silvercrest Opportunity Fund. Thanks to Azria for having us here this evening. Let's talk about the market. Not the headlines, not the fear, the data. Right now in Arizona, we're in a low inventory environment. According to the Cromford report, we are still significantly below historical active listings, meaning demand continues to outpace supply. Translation, prices aren't crashing. Prices are sticky because sellers with 2 to 3% interest rates are not listing. Inventory drives the market more than interest rates. Second, affordability. Rates have pushed buyers into paralysis. First-time home buyers have stepped back, not because they don't want to buy, but because they don't qualify. That's where creative finance and alternative asset strategies thrive. While agents are waiting on rates to drop, investors are solving the problems with seller finance, manufactured housing on leased land, and notes backed by real assets. These strategies win in markets like this because they don't depend on Fannie or Freddie. Third, opportunity. If you wait for the perfect market, you will wait forever. The investors making real money right now are the ones who take action in imperfect conditions and manage risk intelligently. Data creates safety, people. Action creates income. My portfolio isn't built around predicting the market. It's built around controlling the asset. If you're looking for boredom-proof, recession-resistant returns, notes backed by affordable housing, or doing what the stock market can't, pay monthly income backed by a tangible asset. And in closing, this market rewards creativity. It rewards speed. It rewards those willing to solve problems others avoid. Thanks to Ezria here this evening. Let's see. We call that one. We call mobile money. Today's brought to you by accredited percent net return 1 year, 4% net for 3, or 15%. 60 accredited with Silvercrest Opportunity Fund. Let's get back to the event here. Hey, how's it going? That should be the give percent sale. Those angles. My wife and I were dying, bro. When my hair jokes, anyway, just like off the child, girls, damn, you must be having a good time on the text. That is good all the time. I was like, and she goes, no way, that's not possible. Yeah, that's what it is. That's the Hello, how's it going today? So we raised private capital from investors in performing debt. So opposed to being a landlord and tenant, you can buy a mortgage. So you become a lender with a collateralized credit opportunity and buy that note or mortgage and make the interest rate on that paper. You can make a 10 to 15% return
It's all the investing.
Correct. Yes.
Look at too much investing. I opted out of it. I said something.
Could be, there's other strategy to earn tax deferred or tax free gains for retirement. And you can do that in like a sort of 401k, convention IRA where you self-direct those investments. So using directed IRA. Yeah. So that kind of allows your capability to earn the full non-have taxable things. That time. Our positions are like 30 to 100,000. When adjacent real estate investment funds, single family notes can be 100 to 400,000 if you the first mortgage. Where these are 30 to 50 to 30 to 100. Easier diversification and higher yield on the contract. In comparison.
What do you see?
10 to 15% annually. So you can either buy the whole note or the full year at a 20-year term, and you hold that relatively illiquid asset in your portfolio. You own it, right? That's your loan that you own. Or I could pledge that note, it's called hypothecation, to have a collateralized loan to my investment. And I pledge that at, say, 10% for 1 year, and in a year, what was your income? Amalia, congratulations on receiving your payments. Would you like to go liquid, or would you like to auto rollover? Kind of nimble in that, because we control everything from the origination. We know anything. Not just buying somebody else's payments. Anyway, take my card if you like. We do a weekly mastermind on Zoom. You can join us as uninvolved or in as you like. That's life, due diligence, and deal flow, stuff like that.
And the shortest time is a year.
Yeah. So once it gets to a note strategy, right, which the majority of them do, we draft out 1 year liquidity, say 10%. You could get into like a deferred program where you make a loan, and we fund the calling of the contract of the year liquidity, or we pay the balance of the accrued interest. That we've agreed, where you could potentially invest in a fund that would deem yourself an accredited investment. It's about $1 million in net worth. Or 10% for 1 year, 12% for 1 year, 14 for 5, and you become a credited owner share in our portfolio. So instead of a holiday being on investment, now you own heads across multiple years. It's like putting your money in the bank in the CD, but you're making 6%.
Okay, cool. I get all that.
Yes, ma'am. Yeah, if you'd like, maybe I can take your info. I won't blow your spiny needs. Promise. Yeah, my pleasure. So that's where we started. I don't have my other card. Okay. Real estate.